Today's episode is brought to you by Stream by AlphaSense, an expert interview transcript library that integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Start your free trial at www.streamrg.co/PMC. That's STREAMRG.co/PMC. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft, and thank you all so much for the support and for tuning in. Be sure to subscribe to our recently launched Substack, the Planet MicroCap newsletter, for free at microcapnewsletter.substack.com. I'll be sharing all recent podcast episodes from Planet MicroCap and Due Diligence. Plus, every Sunday, I put out our weekly MicroCap wrap to show how the MicroCap space has performed every week compared to the broader markets based on data from the MicroCap Review Index. Go and check it out right now. We have reconstituted for Q3. Fascinating quarter. We'll be doing a pod very, very soon to talk with some fellow microcappers on how interesting this quarter was, or first half year. So definitely tune in for that, and also go and check out some of the data. It's definitely fascinating and interesting to see what companies make it in each quarter or not. So again, to subscribe, go to microcapnewsletter.substack.com. Now, for this episode of the Planet MicroCap podcast, I spoke with Tim Eriksen, founder and portfolio manager at Cedar Creek Partners. We're continuing this Tim Eriksen week here on Planet MicroCap. So be sure to actually check out our interview talking about Solutron Devices, SODI on the OTC, where Tim is the CEO. We did that interview for Due Diligence, but it's on the same stream. In addition to being CEO of a publicly traded company, Tim runs Cedar Creek Partners that focuses on micro and small cap equities. We answer all your questions that came through on Twitter. Thank you for sending those in, by the way. And as the title suggests, making a business grow is not easy. Tim has no fear taking larger positions in microcap stocks and enacting change to hopefully unlock value for shareholders, which can be difficult at any level. We talk about a couple of those experiences, including FarmChem and Tix Corporation, as well as liquidity, position sizing, and much more. Tim doesn't do a lot of these, so this was really awesome that he took so much time with me this week. So thank you again for tuning in to episode 233 of the Planet MicroCap podcast, and please enjoy my conversation with Tim Eriksen. This episode is brought to you by Stream by AlphaSense. You can find them at streamrg.co/PMC. That's STREAMRG.co/PMC. Stream is an expert interview transcript library that is starting to become an integral part to investors' research process. They have a number of interviews on a wide variety of companies, including TMT, consumers, industrials, real estate, and more. Stream provides over 300 expert interviews per week, and 70% of their experts are found exclusively on Stream. Stream is unlike any other transcript libraries. Stream integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Stream's community of experts and thought leaders partner with Stream to build their professional brands and expand their industry influence. Right now, there are approximately 8,500 plus call transcripts available. For more information, please visit www.streamrg.co/PMC. That's STREAMRG.co/PMC. Welcome back, everyone, to the Planet MicroCap podcast. My name is Robert Kraft. You can follow me on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And we are continuing the Tim Eriksen week here at Planet MicroCap. I'm sorry, I don't mean to embarrass you. I can't help myself. But joining me today to dig through his investing philosophy, how he assesses new investments, just everything that we probably should have covered at some point already in Planet MicroCaps history, but I'm excited that we're doing it finally, which is why we're having the Tim Eriksen week. But joining me is Tim Eriksen, founder and portfolio manager at Cedar Creek Partners. Tim, thank you for joining me today. How you doing?
My pleasure. I'm doing good.
Good stuff. So we actually just published yesterday the interview that we did together about Solitron Devices, where you are part-time CEO there, and kind of dug into the story a little bit. So today I wanted to provide everybody that, like I said, that overview of your background, investing philosophy, all that good stuff. So my first question on here that I always ask is, where did your passion for investing begin?
For me, it was during my undergrad. I took a class on money and banking, and there was it wasn't the smallest class I think I ever took. There was like 4 students. It was at a small school, but the prof was brought in, and he was a deep value guy. It was, well, I'm going to age myself, but it was 1990, 91 era. So the California banks and like Wells Fargo were struggling and different things. And that's when Buffett was investing, but just really brought this value perspective on things. And really that was kind of when the light bulb came on for me, and in terms of all the value investing and really start reading Buffett and all of that. So that kind of clicked the passion for it and the approach. And then it took a number of years for that to kind of have any realization. Because I was already nearly graduated with a history and poli-sci degree, waited a few years. I did work for Franklin Templeton funds, but it was nothing related to investing. It was, like shareholder services and explaining maybe a fund. And it's like, yeah, but this is nothing. I'm not enjoying this, and then got an MBA and thought, I can just kind of get onto Wall Street or get at a firm. And I realized I don't want to live in Wall Street. I was married. I had a 1 or 2 year old. I'm like, I'm not going to New York City with 2-year-old. No offense to those who live there, but it was like, so now I got to try to do it, some other way. And just said, well, I got to provide for my family first. So then I did that, and ended up long path before I came across Marketocracy, which was a online virtual portfolio thing that was in the late 90s. Started doing that in the early 2000s, and just became one of their top virtual portfolios, which they then mimicked for a hedge fund and mutual fund. And they put articles out that I wrote or about me and other people that were in their small group, and kind of helped me get more of a following. And then deciding to work for Walker's Manual, which was then next. I left the corporate world and worked for Walker's Manual, which was just awesome. I mean, you don't see it. They haven't been published in 10 or 15 years, but in the deep value community, these old manuals that from the late 90s and early 2000s that covered unlisted stocks and community banks and microcap stocks is like, they're like $100 to buy used today, because people will still pull them out and half the companies are still around, and it's just kind of fascinating era, segments of the market that, you don't see in the newspaper. You're not going to see on CNBC. They're not going to talk about community banks. They're not going to talk about Party Resources, this family run business in Philly for 100 and some years, or Beaver Coal or something that was going to talk about. This is really pre-internet days, which kind of killed it. So now that kind of got me going, and then we decided to start a fund. Launched with $150,000. It was one of the smallest hedge fund launches ever. But anyways, got to where I am today. It's not that I'm a huge fund manager, but I love what I do, and I'm sitting here in shorts, which you can't see, and normally I probably wouldn't have showered yet, because I just get up and go to work. It's just down the hall. So that's my normal day, and I love it.
Good stuff, man. Me too. I only showered today for you. I figured we're gonna put this on YouTube. I gotta keep up some kind of apperances. Yeah,
it's the same shirt for me as the other interview. It tells you family nice shirt.
Yeah. We don't change our shirts. It's just like we put right. But what and this is a similar story. People get especially when their first exposure to investing is more on the value side, especially on the microcap side of things. Everybody, it's like all roads eventually end up leading there. Was it a similar thing for you? Is like, once you got like, okay, this makes sense, value investing, deep value, is that when the rabbit hole started going, and like, okay, microcaps clearly makes the most sense?
Yeah, I don't know what triggered that, or exactly when in that process, but yeah, I don't know. There's just some side of me that just got fascinated and since feeling like I know something that nobody else does. I mean, it's an informational advantage that's legal, of course, but it's just, it's like, why am I trying to compete against, hundreds or thousands of people or try to figure out Apple or Microsoft? And it's like, I can understand this business in minutes to hours and not days. And maybe there was a laziness side too. I don't know, but just the beauty of the simplicity. And then the valuations were attractive. I mean, that's usually what gets you there. They tend to be because of their small size. And there's a certain risk, but I don't think the risk is disproportionately greater that justifies the smaller valuations. So.
I guess I should have asked that more nuance of what eventually led you to the unlisted stuff. How'd you get there? That's the question.
You just keep migrating, I think. No, it's like the person who keeps tanning too much. They don't realize it. Before they know, they're way out there and they're orange and president. No, it's just they don't realize it. No, it is. It's yeah. Expert market though is at an extreme end where it starts. For me, you're at the uncomfortable because you're nearly private. And that's not so ideal. You have to have a good margin of safety or a really much lower valuation to justify it to me. There is a value to liquidity. We don't want everybody just rushing in thinking this is the same. It's not the same. You got to be willing to go, nothing happens for 5 years. I'm fine with that, or 10 years, 20 maybe, but.
So then, all roads led to then founding Cedar Creek Partners, as you said, is the potentially the smallest hedge fund launch in the history of hedge fund launches, with 150K. So tell us a little bit about that. Why you eventually wanted to found it, and then also the philosophy behind Cedar Creek.
Yeah, I mean, it came about. I was working at Walker's Manual, and Andrew Berger, who runs it, he now started AB Value and does some, has a good sized fund, way bigger than mine. But he was like, "Hey, I want to start a hedge fund. Do you want to work for me?" And I was just I kind of want to do it myself. I thought, and this can't be that hard to raise money, and this was extremely hard for me to raise money, and still is. But regardless, it was really easy to just apply that. Approach, which really is a value approach for me, is a low PE, occasionally a book value approach, but I tend to I don't like businesses that are losing money no matter what the discount to the book value is, because I tend to make errors on how much they're losing and how long they may be losing it and things like that. So it's like I've always been kind of a low price to earnings investor. Predominantly single digits. When I say low, I mean low. I don't mean like, oh, it's only 15 times earnings, or 12 times 2027 earnings, whatever that supposedly means. I tend to spend a lot of time, most of the fund's history looking for 5 or 6 times earnings, selling at 9 or 10 times earnings, and wash, rinse, repeat. So cycling back through the same stocks a lot. So it's very microcap, very deep value, but in the sense of low earnings, not low price to book, and calculating what's the real estate worth, because those are hard things to turn into cash. And so I'm really, I guess, when you push it through as a cash flow investor, I want the earnings and I want them to be free cash flow, much more likely to have a positive outcome, because they have to then be burning that cash for me to turn out bad. If they give it as a dividend, buy back stock, just sit on it even, which isn't ideal, but that's better than, investing it and losing it in something speculative.
Absolutely. Well, this actually a perfect transition into my next question is, what is that ideal investment look like to you? Some of your criteria for that.
Decent enough liquidity. I can get a good sized position because I don't mind owning 10, 15, 20% position. Give me a low earnings multiple for, single digits. Ideally, it's like, well, I'll take the growth. Ideally, I want something that's growing as well, because that's what's going to give you that rare, 5, 10x return in a short period of time is the growth, right? So those are really, really hard to find. I think I could probably count on one hand in 15 years, of really good growth and low valuation. But boy, you got to be always looking for it, because when you find it, that's when you load up. And it's happened a few times in the fund's history. Usually they were asset managers, but it's you have to have an industry that you understand, that has that good leverage. That's you run into those microcaps that have earnings spurts. They really aren't a longevity business, and they just get one good contract and make good money, and then all of a sudden they go back to nothing. So you're trying to dig through that to just make sure it's something that's got some long range, because then it can get multiple expansion and things like that.
I'd like to take a quick second to tell you about this episode's sponsor, Quarter. With Quarter, you get frictionless access to conference calls, investor presentations, transcripts, and earnings reports from markets all around the world, straight from your pocket for no cost. Quarter's mission is to change the way people look at investor relations and create a completely new bridge between companies and stakeholders. The first step on this journey is to let you, the user, interact with the company's content while you're listening. Visit your app store of choice and try it out today by searching for Quarter, and that's Quartr. Now back to the show. So that leads into also kind of your research process. As we've kind of, you've talked about, you've mentioned, and we've even joked about a little bit, you like looking at some of the unlisted, weird, illiquid, highly illiquid stuff, which I'm going to definitely get to another question about that when it comes to the fund construction and all that kind of stuff. But on the research side of things, how do you start? Where do you go? What are some of the things you look for? Getting in touch with management, let's hear it.
Yeah, it's not as exciting or as straightforward as people think. Like, I don't just, I just run this screen and then I choose these and I dig into that. And I've never been able to screen successfully and find stuff. It's just scrounging, I guess is the best word. Whether I'm perusing, Twitter with the right people to follow that throw out ideas that, that's a great world for someone who loves putting stuff out on Twitter that has a small personal account, because they'll max out and then they want to tell you about it and stuff. So, but for years past, it was message boards, it was corner of Berkshire and Fairfax, wherever, it keeps changing though of where I go. Some of them it's like, no, I don't even go there anymore. Who goes to whatever? I don't know. There used to be so many message boards and we don't go to those anymore, but always trying to find a new place that can just source ideas where someone's going, yeah, I like this. And, I'll spend a lot of time on OTC markets, and just looking at news and filings and clicking on the filing and go, garbage, it's like, oh, you got 1 billion shares outstanding at 0.00, garbage, and things like that, looking for like, oh, that's interesting, in terms of just share count, earnings, what's going on, and that usually then launches. So that's a big part of it. And I've found the beauty of microcaps is you just keep going back to the ones you've owned before. They just kind of, sometimes they're high valuation and they move to a low over 5-10 years and you're back to owning them. And I love them the best because I'm less likely to make a mistake because I've known it for, a decade or more.
Absolutely. Actually, this leads into one of the first Twitter questions I'm going to ask you. I'm going to try and mix them in as
Sure.
Depending on the topic. This was asked by @RiceParkTrees. You kind of answered the first part of his question or their question. How many microcaps is Tim screening in a given 3-month period? Kind of answered that question right there. But the second part of his comment was, the volume of rocks you're turning over to find the gem rocks he is turning over to find the gems. And once you find a potential gem, how much time do you put in talking with management, customers, competitors to get a sense of the business? That's a good question.
No, it is. It's a good question. There's not a specific number. You do try to turn over whatever it is. It's going to vary. There's stretches where I'm doing tons of research. There's stretches where it's like, man, I haven't really dug into a stock in a while, or found anything good in a while. It can be weeks and months, So there's not a specific number. What may surprise people is I'm not on the edge of this kind of a spectrum, I guess. In old time circles, in value circles, it's the Walter Schloss that's much more numerical. Even though I'm not diversified, like he would have 40, 50 positions, I have fewer positions. but I don't necessarily reach out to management. I've never called a customer. Actually, I don't think, I don't spend that time doing that. I don't need to. I don't know that I would say. It's not like you couldn't derive a huge benefit. I know some investors that they call me and I'm like, yeah, you know more about this than I do, or, about Solitron. And they'll be like, I'm like, you talk to our supplier or a vendor, or you talk to a customer. Are you calling Raytheon and they're going to talk to you? But they'll dig into that level. I don't really need to. If there's that much me of where I don't understand it, then it's in the too hard pile already. So it tends to be in industries. It's like, I don't need to call in the oil and gas industry the supplier or that. I need to know where it is, what's the well life and things like that. I don't need to know who's buying it or whatever. It's a commodity, or I don't know. The community bank. I'm not calling the management or different things like that. So very little on that end for me.
Gotcha. No, it's cool to hear. I mean,
yeah,
I find that fascinating, that answer, quite frankly, because of, the types of stocks that you look at. You would think like that if anybody is doing that, it's probably you, or, right. That's super interesting. Yeah. And then actually my next question was going to be, and this actually was another a Twitter question that came in through DM, so I don't want to give their handle, but it was similar to what I was going to ask about. How do you think about managing liquidity of the portfolio, especially since you look at all, a lot of these very illiquid names?
Yeah, and I have a fairly illiquid portfolio. I mean, it has to be a reflection of the nature of your investors. If you don't think if your investors are coming in and coming out, or the number of redemptions in my fund is really low on a given year, to where if I'm 5 or 10% cash, I'm fine. I don't need to have massive liquidity, because I don't tend to have that, and you got to know that, and so I'm quite comfortable, in things. I have some calculations that look at average volume. How long would it take me to get in or out of that? And I find out usually those aren't very accurate, because it's past looking. And what makes me want to get out of it is suddenly some event changes. I found like I can buy something over days, and sometimes it takes months to get out of. And that's very, very frustrating or challenging, but you just have to be that patient about it. It is one thing where it's probably why I'm probably quick to sell when there's good news and a stock pops or different things. It's like, oh, and there's suddenly liquidity. Even if I'm not sure, I tend to sell into it a bit, start to reduce the position. One, because it's worked a little bit, but two, it's like there's liquidity there. I should probably take it. It's an art. I haven't made mistakes where all of a sudden I'm like, oh no, I need to use margin or anything to deal with a redemption. I haven't had that. But so, yeah. And if it's a personal portfolio for somebody, it's like, you got to know what your financial needs are, so you don't put yourself in that bind.
The classic buy on rumor, or buy on extreme due diligence and then sell on news.
Yeah. There's a lot of that. Yeah. Yeah. No,
and then they actually sent in a couple more questions that are really good here. Have you had success finding asks in the expert market?
Finding asks?
Finding asks. It was in quotations.
I assume they mean, have I been able to find some screaming bargains in the expert market because we expected it to dry everything up?
Yes.
It hasn't materialized that way in a significant amount. A lot of the stuff that I'm hoping I can get that 25 or 50% off, or it's like, a few hundred shares sometimes sell at like a penny, and you have some weird trade. And then you look and you're like, oh, so the person made $27 or something. You're like, that's not what I'm looking for. I want to be able to buy in size at a discount. And I would say to date, I haven't been able to find significant. I mean, there's things that are the same price as 2 or 3 years ago, that I've been able to buy, but not screaming bargains. No, it's kind of disappointed in that sense, but still hopeful. Keep trying.
For sure. Hey, listen, it's not like you don't have the network of folks that are out there digging with you to help find them either. So
and I'm not alone. There's enough other
Yeah.
people and people that have access to that expert market through the right smaller brokers and funds and stuff. It's a competitive environment. There's a lot of other people trying to do this. So
100%. And then last question from this DM: do you think a microcap strategy is appropriate for institutional LPs? I don't know if they mean like a microcap strategy in general or your microcap strategy, but maybe you speak to both.
Oh, of course, mine is. Yes, large sums. That's the thing, because it's like, I don't know how you could really have a decent microcap strategy once you're above $100 million of allocations. So is it appropriate? Yeah, I think it's appropriate. It's certainly a niche where you can make more. But you probably grow out of it. A lot of the hedge fund managers grow out of it. So would the institutional money. But when they're a smaller family office and stuff, I would, if they were just asking my advice, they certainly allocate, to that. But you'll find there's a lot of overlap. I mean, you've talked to Dave Waters, and it's like, I'm like, Dave, and there's like, yeah, I own that. It's like we can go, on American U.S. stocks, it's like, yep, we may have 40% overlap or something. There's a lot of people fishing in the same waters, it seems like. Waters. Anyway.
Absolutely. Well, those are some really good questions that came in. So my next question is, and actually it has to do with some of your investing experiences, especially more recently as an activist. I guess by recently, I guess 6 years. But actually at Ben Bakshi on Twitter asked the same question I was about to ask about, how has your experience as an activist helped guide you when you're looking at stocks?
Wow.
It's a good one.
It's a good one. I think there's a lot of things you pick up on and you learn in the sense of when can activism even matter? When can persuasion even matter? And looking at when there's a controlling shareholder, which a lot of small microcaps have controlling shareholders, and we always think we overestimate our ability either in activism or persuasion to be able to gain improvements, and realizing that no, they're not really even open to that. It's a lot more family run or just run based on their philosophy, and they can't think outside that box. But so it's like important to me to be able to ask the right questions or probe that to kind of know, okay, this isn't going to change, So if I'm valuing it, I got to understand that this is not something that has that possibility of a catalyst changing it in a short period of time. This is going to run the way it's run, and it's probably going to get handed off to the next generation and the next generation. It's like I always look to see is, okay, there's a CEO who owns 53%. Is this son or daughter working there? It's the first thing I look for is somebody being groomed that's keeping this, because you love to find, no, none of the kids are interested, which usually means when the CEO is older, it's going to get sold. So you kind of have a termination date there that's helpful. And then the closer you get to that, then you could actually be buying really close to some catalyst. So there's the activism ties into that, but that's the only connection I would make.
Absolutely. I mean, do you, when you're looking at potential ideas, I mean, do you think to yourself when you're looking at potential one, you're like, maybe I might, I forgot who I'm blanking on who I interviewed when we talked about the idea of suggestivism versus activism. When we're, especially with microcaps, because, when you're operating at your level with some of these other fund managers, like, these management teams tend to listen a lot more to what you have to say. But I mean, when you're looking at potential new investment, do you think to yourself like, oh, I think do you have this urge to want to be more suggestivist or activist, looking at Solitron or with FarmChem and stuff like that?
I wish I didn't, but there's a side of me, and I don't want to get into the psychology of it or whatever. There's a side of me that just hates the bad actors, I guess, that I think are bad actors that are doing things they shouldn't do, if they're not holding meetings or whatever, different things that just, I I kind of want to see them removed because they give a bad name on the industry and on microcaps. So there's kind of a, I don't know if you want to call it like a righteous indignation or just something that just gets under my skin. Yeah, so then it starts to color things. I much prefer to look at something on its own merits, saying I don't have to do anything and I can just ride the quality of this business than me having to get involved. Getting involved now has taught me how much I have to get involved. If I can't just do it with suggestive, it's frankly way too much work for not that much more return. You know what I mean? It's kind of like you want to find the easier thing. You learn the Munger wisdom. He used to interact with Buffett on you're doing it the hard way, or you know what I mean. Munger's like, find the great business and just sit on your ass. It's his kind of thing, and that's what he would say. And there's truth to that. Is why do it the hard way, where you got to go in and do all the stuff.
For sure. I mean, and I guess to be fair with that, it's like, look, if we're gonna hunt microcaps, though, at the same time, like you almost. You kind of, it's like, it's hard. It's hard not to, because there's always hair, No,
it is.
Yeah. But, let's go through, let's do a little story time, because I like story time. You like story time. We grew up with story time. Sure. We tell our kids story time. And there's a lot of lessons that can be learned from story time. So, in prep for today, I went through, some of the letters that you put out there. And, one story that stuck out to me, because I don't think I've ever seen this on a letter. Maybe I'm just not reading enough, but it stood out to me was when you're talking about your experience with a Tix Corp. TIXC, yes. And how you like straight up said like management just sucked, but it was still a core holding for years, and you said in the letters how like even while you're still a core holder, like management sucks, like I'd love to hear some of those lessons that you learned from that experience and like why you just kept holding what we were holding out hope that they magically change their minds. Like I'd love to hear about that.
Yeah, I wasn't, holding out hope that they would suddenly change. I was holding out hope that shareholders would bring about change, which was tried to do there, and they ended up with a split board. So it almost happened, but didn't quite happen. And then COVID just destroyed the business in a way, temporarily, because there's a long story back in there too. But anyways, yeah. So I mean, at least I'm willing to own stocks that are run by what people I would consider unscrupulous, untrustworthy, bad actors, and willing to work through that, especially if I think there's a chance for change, or that there's a chance for suggestive and pressure, whether it's full on activism or not. I mean, a lot of people just don't want to do that. They don't find it enjoyable to own something, but that's what makes the valuation usually even more attractive. So it's funny that I get emotional about the bad actor in a way, but on the other hand, I'm not emotional about, I'm fine to own that, and people are like, how could you own that? I don't know. I'm fine. I have a weird disconnect maybe.
Right. Because in that situation, it was, I mean, if I remember correctly, it was mostly just it was taking excessive fees, right? It wasn't a management compensation, was just ridiculous.
Yeah. You had the kind of $600,000 earnings while you're living in a different state and probably not that deeply involved, where you already have a $300,000 COO running the business. It didn't really make any sense. Then that ended up with a lot of other things as myself and Jeff Graham at Bandera tried to do an equity infusion and we made a higher offer, yet the board took a lower offer from the CEO, all kinds of things that were just, awful, but then they ended up in bankruptcy, and Jeff and myself and Heron Bhakta and someone else bought it out of bankruptcy. So we now own it and at least a smaller part of it, smaller piece. So.
That's super interesting. I mean, I feel like that there's quite a bit of that in MicroCap, where you believe in the underlying business or technology, and yet it's just being run by, F management, to say the least. Do you have any other experiences like that where, then it did ultimately work out, where they did, it was just simple change in management, maybe a few board directors, and then ultimately, that value was realized?
Sure. I mean, although a lot of times it's like it's the market. It spurts, and if you got out at the right time, it worked out, and then kind of the business goes back into a struggle or whatever. But we've been able to do activism. Dan Zeff did activism at TSR, where I'm on the board, and brought about changes there, and that's done well over the last, the 2-3 years that we've been on the board there. A lot of times you just find you didn't get what you thought you got. Solitron, we thought we were getting control of a much better business. I mean, it's up, but it hasn't even yet been what I wanted it to be or what I thought it was when I first got involved. So yeah, it can happen. You can see change. I don't keep them on the top of my head where I can just answer, oh, here's one where, CEO change and activism change, and it did all this. But I know it happens all the time. And stuff that I came into later. I mean, even a lot of the stuff that Robert Alpert and Clark Webb have done with P10 Holdings and other Globalscape and stuff before that. A lot of that they had to do a little bit of suggestive activism or come in and kind of take control without necessarily doing proxy fights. And you find the right people that can do that, and you just like to ride their coattails. You find people smarter than you. You learn from them and you milk them for what they can do.
For sure. Well, this also leads into my another question that actually came in via DM about one of more recent activism campaigns that you were involved in, and they wrote in they'd love to hear some detailed Q&A about the FarmChem. Okay. Interested to hear the backstory of how you got involved and then what led to the recent we'll start there. How you got involved and what was interesting about it.
Yeah, I mean, FarmChem is probably something I'm pretty sure I saw on Twitter, back when it was maybe $1 stock or something, and bought it and made a quick 30-40%, thought I was really smart, and then realized I was an idiot because I sold it and it was worth way more than what I sold it for. It wasn't just about the quick gain. But so then over time, I started buying a little bit more, following it significantly more, and just came to the, you kind of then start to see that there's a very deep value shareholder base there. And I realized they just need a nudge. It's like it's cash is building up and needs kind of an outsider watching what's going on. So I'm like, I think I'll just, it's an OTC, so it didn't have SEC filings. So I think I can run myself as like a board member pretty inexpensively here. And go through that process. So then I had sent in the notification to do that. And then I don't even know how it came about, but then I found out, I didn't know Tice Brown at the time, and found out that Tice had sent in a notification for where I had just done 1 seat. He had done 2 seats. And it was like, well, there was only 3 seats on the board. And it's like, I don't think I've ever seen a three-way proxy battle with different things. And it would make no sense for us to compete against each other. So it was like, well, why don't we just, is there anything that prevents us from working together? And you check with lawyers, like, no. You're like, oh, okay, then let's just agree to work together and solicit proxies together. So we're able to kind of go in, change the board. Then you just, you get under the hood and find out what's going on and different things. And so you start making certain changes and trying some things to improve, revenue and stuff. So it's been a challenge. It's not been what we thought in terms of, we thought it had a stronger tailwind to the business. It was kind of had a good COVID spurt and then kind of slowed a bit. Working through that, trying to figure out how do you get a business to grow. And that's where you learn a lot, because you think it's somewhat easy. And it's just like there. It's like, you can't make some probation department choose a patch over urine test or hair test, and you can't control their funding, which results in how much they can test, and then the cost of each and comparison, and then do they really want to know is a whole other ball game in certain things with courts and certain jurisdictions. It's like they don't seem to really want to know that someone's still using it and stuff. But so.
Got it. And there, he had a couple more questions from on this. On FarmChem, what led to the recent financing not getting completed, and what is the plan to grow and maintain the business? From what you can tell us.
The press releases addressed that in terms of, in terms of the change in the business. We had signed a contract where we thought we were going to get a large customer that might increase revenues, 10% or more. And then that didn't materialize to any orders. We thought it would be large, so then it didn't materialize at all. So we're like, okay, well, we have a disclosure related to that. And we thought, okay, we'll just let them know and we can just kind of delay this, and we had a few other things come about that, if you read through there's a lot of rules and restrictions when you do the debt offering like that, whether you do any reorgs internally, management, just different things that are limited, So we had a few things we just thought, we just want to make sure we're clear of if this is what's going on. And they're like, yeah, we can't just delay it. We have to pull it. And we were like, oh, we didn't expect that, but it was what it was. So we had thought, we kind of had strong, stable business, potential for upside. It made sense to do a buyback now. Even if you use borrowed funds, you're basically just pre-buying, a year from now at whatever the interest rate is, say you're buying at $4 a share and you're borrowing at $9, $4 times 9%. You're buying basically next year's shares already at $4.36 and a couple years out and then paying that off. We thought that made some sense, but the business kind of hit a little bit of a bump, and it is what it is. As you work through that, businesses do that, which, like in spreadsheets, you don't see that in real life. You do see that, you have bumps and you got to work through it. And how do you grow it? Because growth is a huge factor in valuation of anything. With the absence of growth or a slight shrinkage, your valuation is definitely going to be a single digit multiple, so you need that growth to have that higher valuation and value of the business, right?
Absolutely.
So that's what we're striving to get there, and going to work our tails off to get it there. And then along the way, do good capital allocation and hope it works out the best for investors, which the board's a significant percentage of that. 37, 38% of the shares outstanding, I think, are owned by the board.
Gotcha. So, we've talked through a few stories already. What would you say of all the investing stories that you've gone through, and, may even be ones that we talked about already, but what would you say is an investing experience that taught you the most and maybe guided how you really think about, when you analyze a potential new investment?
Wow. You're just asking hard questions. No wonder I don't do these things very often. What taught me the most? I'm kind of a reflective person. So for me to try to answer off the cuff of what taught me the most, I'm sure there's positive and negative. There's certainly investments, that didn't turn out that taught me a lot. I think you learn more on the losses because they're a little more painful of what you missed, what risk factor, I know it's probably 7-8 years that, whether it's, I had two things that were oil related, a Wilco, which a lot of people were buying that had platforms off of, up off the UK, North Sea area and stuff like that would, but it was very oil dependent, and you just didn't realize, wow, when the pricing of that commodity changes, the value of that business changed. A lot of people have found that out when they've invested in shipping, because they go, oh, look at the day rates of these shippers and this or that, and all of a sudden it's like, yeah, and a year from now it's 1/5 of that, and your valuation just plummets, and so it happens on submersible rigs and just a lot of different things that really have this volatility in pricing. Of how long those contracts last. So they create a lot of cash, but then all of a sudden they burn a lot of cash. So you learn, wow, I didn't know the business as well as I thought. And you learn painfully so. but then there's things you learn on the upside of the just the little factors you're looking for, that I don't know. I can go on. I mean, I can think of a recent mistake was I sold P10 way early because I read the press release and I was reading it like with a fine tooth comb. And I'm like, there was something where I thought they said it would grow EBITDA, but they didn't say EBITDA per share. You know what I mean? And I'm like, oh, you left out a key phrase because everything to me is about per share. You've got to be growing cash flow per share. Don't just tell me you grew cash flow. You could do that and dilute me. So I took it as, oh, this may not be as great of an acquisition as their prior one. So suddenly I'm selling this stock at $3 or $4 that then goes to $7, $8, $10. And I was, oops, where probably if I picked up the phone and talked to management, they would kind of go, oh, we didn't recognize that we made a wording change, or, they would have been able to kind of straighten that out. So there is certainly benefit to talking to management at times. And that would be like a lesson learned.
But at the same time there, like, look, you have your criteria, like let's say you found that and it ended up being a loser. You're like, oh, glad I found that. I mean, otherwise, so, you on that, there's the opportunity cost of what you could have gotten. But at the same time, I'm sure there is one that will happen or one that has happened where you did the same thing. And you're like, oh, thank God I sold that when I did.
Yeah.
Not saying to that example specifically, but like, I'm sure there's other things that you found that,
right.
like, that having to do with your criteria. So one last question on story time. I mean, is there any that we've missed that, because listen, I want to make sure, I'm doing a service for our audience that follows you very closely and, everything that you do out there. So, I mean, are there any other, good, fun stories or interesting stories that you were participant in that, folks on here are like, oh, come on, Bob, make sure he talks about this.
No. There's nothing exciting. No, I don't know. Nothing pops off the top of my head of, probably what I thought was important may not have been to them, but no, sorry.
No,
I mean, if something comes up, I'll put on the same shirt and you can just ask the question and I'll act like it. We just tie it in.
Oh, perfect. No problem. I'll make sure I take a screenshot so I know.
Keep your beard the same.
Yeah, exactly. I have to ask also, like right now, we're dealing with the, inflationary environment. We're seeing the Fed hike, I mean, how are you, we're recording this on June 21st. And, how are you thinking about, your own portfolio, what you're doing? I mean, are you hunting right now? Love to hear where your thoughts are.
Always. I'm not, I largely ignore the macro. I spend a good quality 3 or 4 minutes on it, a week, maybe. It's just, I mean, yeah, you kind of want to have a sense of what's going on, but if anything that I'm trying to buy is really going to vary in how I value it based on a few percentage points of inflation or something related to GDP or GNP, whatever, then I'm not, I mean, I do follow it. I would say though, I do follow it in relation to banks. Cause I mean, it can be a huge deal for banks. You don't want to have interest rates go up and suddenly their cost of deposits be 4% and they have a bunch of 3% mortgages on their books. Then this is going to look like the SNL crisis of the 80s and stuff. So there are certain things where it really matters. But for the most part, it's like I've always followed that agnostic approach of whatever it is it's doing. Look for bargains. When I find them, buy them, and not really worry about the other. I don't want to sit on my hands because I'm worried about what inflation is. I mean, do I have an opinion on it? Sure. Do I tend to? I mean, not that it matters. I'm probably in the transitory camp of it's more fuel oil related, and that'll likely settle down, along with just, government spending has been dialed back and all that. So I tend to, wouldn't shock me if they overreact. They're being behind the times. It's just, I personally expect, the economy to slow, but it doesn't really factor in anything I'm buying. So.
Very good. All right. Well, look, you've spent, I've taken up enough of your time between our interview on Solutron and then here today. So, to close this out here, what advice do you have for folks that might just be dipping their toe into microcap investing, or just, wanting to learn more as to how they can be the next Tim Eriksen?
Oh, well, you had me until the end there. Well, one, be yourself. You have to understand who you are, your own emotions, your own things. Don't try to replicate somebody else. Everybody's going to be slightly different. They might be more growthy. They might be more book value oriented, hard assets, end of the spectrum. They may even be much more growthy and be able to do that and handle higher valuations and things like that, or leverage or different things. But I mean, it's to me, I still think it's the elemental stuff should be the same, fundamental stuff of learn accounting, read financial reports. It's not about reading blogs or message boards. May give you a ticker and an idea, but it's about, really learning business, learning what they're saying, learning what operating leverage there is in the business, being careful when you're buying something that loses money. It'll tend to still lose money, and that probably won't work out. So are you buying a story, or are you buying something that's solid? And I guess I kind of look at things a lot like as if, I'm buying a business. I'm buying real estate. I care about cash flows. I wouldn't buy a condo because I think, I don't know, or it's gone up 20% each of the last 3 years. Therefore, I'm buying the condo. It's like, what is the rent cash flow on this versus what I'm paying? That's how only way I think. Because I'm going to be probably wrong on what I think it could keep going up. Ultimately, it's only going to go up what the cash flows do. That won't stay disconnected very long. So focus on cash flows, on reasonable returns. What should that business be valued at? Learn how each is different in their own unique way, because every industry is different because of their capital expenditures and different things. Just begin to get that business knowledge and apply it. That's would be my thing. And I guess secondly, to have a really long answer, is start with what whatever your passion is, whatever, if you're not in the financial world, but you're in tech, or you're in, I don't know, automotive or something, you have an advantage there. Go use that advantage in that little niche and learn about it. Right. It was the cryptocurrency guy is the one who should have seen that the high demand for NVIDIA's product or whatever, and how that was going to make that stock go up because, everybody needed it to mine for crypto or whatever. It's those type of things that someone really deeply involved is going to catch earlier. So you can use that. That's my 2 cents, and it's worth what you paid for it, people.
It's free. No.
Right.
So Tim, with that, where can our audience go and find more information, to follow you, to learn more about your fund? Close us out there.
I'm on Twitter, Eriksen_Tim. My fund, well, it's called Cedar Creek Partners. It's under the management company's name of Eriksen Capital Management, and I think it's EriksenCapitalMGMT.com. But if not, if you look up Eriksen Capital Management, you should be able to find that. And the investor letters for the last 5 or 6 years are there if somebody finds that helpful, and just more about it. So.
Very good. All right. Well, Tim, thank you so much for joining me today. I really do appreciate it. Good luck. Stay safe. I look forward to our next update.
All right. It's been my pleasure.
Thank you.
Thanks, Bob.
This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.